Thank you, David, and thank you, Joe, for inviting me here. And actually, it is a pleasure to be here today. Earlier, when I arrived in Ireland, I was privileged to meet President Mary MacGill, and when I introduced myself and what I was doing, she said, "Oh, you poor man, what have you done to deserve this?" And I have to say, many people have questioned my sanity. But if the definition of insanity is doing the same thing and expecting to get a different outcome, as David said, I've lived through 6 economic crises before. In all of those cases, the economy turned around and life got back to a positive track. And as I hope to demonstrate to you today, I believe the same will happen to Ireland. I can't predict precisely when, but it will. In the excellent film Senna, the documentary currently showing in cinemas on the life of the Brazilian racing driver, there's a scene where suddenly a new racing car comes onto the circuit and starts winning everything. Senna, like all the racing drivers, becomes obsessed and wants the same technology as this car so that he can burn up the track. The scene could be a metaphor for what happened in Irish banking. Everybody, or most at least, in Irish banking sought to out-Anglo Anglo, and the carnage at the end has not, metaphorically, been much different to what happens at the end of the Senna documentary. Your focus today is on what must happen in the next 5 years in Irish banking. It has to be said yet again, so that we cannot forget that serious mistakes were made by banks, and this can't be allowed to happen again. The government has had to put an enormous amount of taxpayers' money into AIB and other banks in order that we can help put things right, both for our customers and the wider economy. In turn, the government rightly expects rigorous governance, protection of its investment, and active support for the economy as we prepare for the eventual return of AIB to private ownership. As the chairman of AIB, I and the board subscribe to the need for significant change, and the bank is going through an extensive restructuring programme that incorporates organisational size, staff, business focus, culture and governance, all of which is designed to prevent a repeat of the disastrous and far-reaching crisis. But how did it come to this? If we look in the wider context, Nyberg makes it clear that herd mentality and groupthink amongst a range of parties was a key issue. There was a belief, which in retrospect was clearly naive, in the paradigm of efficient financial markets. All believed until too late it was a liquidity and not a solvency problem. If the problem wasn't only due to banks failing to perform or behave in an appropriate manner, neither can a solution be found without all parties working together. In AIB's case, there was a major control issue. Effectively, separate banks were operating within the overall structure, and these were not subject to the control or risk functions that should have applied. Now the board and the government have undertaken at AIB what is certainly one of the biggest corporate restructurings ever carried out. Part of the change this has driven is moving AIB to a single bank model, and this will empower the control functions to operate. Other change has been well documented. As of this week's AGM, not one member of the then 16-member board of 3 years ago remains in place. Likewise, the executive committee, the bank's top executive team, is now an entirely different group of people than 3 years ago. Some were previously in other roles in the organisation, but many are new to the bank. Furthermore, anybody, executive committee members included, who has been appointed to a senior leadership role in the organisation has been subject to a very rigorous selection process which closely examines their leadership, values and behaviour, as well as intellectual capabilities such as critical thinking. Now that the government has decided AIB should continue to play a role in the recovery of the economy, the AIB Board's objective is to strengthen accountability in an engaged workforce. AIB's culture was wrong, and we are now setting down new principles for everyone in the bank, from boardroom to branches. We must be transparent in our dealings, inside and outside the bank, and we must be accountable for the decisions we make. We must understand the needs of the communities we serve, and we must focus on the future rather than just on short-term concerns. We must provide genuine access and assistance. The bank's customers feel disconnected, and even though there is money to lend, people feel they cannot get access to it. It used to be said that entrepreneurs treated the answer no as just as a request for more information. We have to help customers understand better the information banks need so they can lend to them. We're introducing simpler application processes, and in short, we must achieve easier and more productive interaction between ourselves and our customers. So far, in pursuit of that vital goal, we have begun to simplify the structures for customers. We are tracking and following up on all loan requests, both formal and informal, by businesses. We are training staff on how to deal with businesses and deploying them into places where they are most needed. Our aim is to demonstrate we want to lend and to re-establish our role as trusted advisors to our customers. However, if the future of banking is to be not only different but also sustainable, I must introduce a small bit of both reality and caution. It is a reality that many sectors most in need of support, such as hotels, pubs and restaurants, face issues of market overcapacity, and lending more in such circumstances is often not in anyone's best interests. It is also a reality that many business and personal customers who can afford to borrow are nervous. In the present economic environment, they are opting to defer investment and spending. And if I may approach the tomb of the forbidden subject of pricing for a moment, it is also a fact that banks must charge more for credit if they are to achieve commercial viability. While this is a very unpopular concept, given the amount of taxpayers' money that we have received, it is nevertheless simply not possible to build a sustainable future for any bank that is lending funds without getting a return. It is also dangerous to think that banks can take equity risks for loan returns. We absolutely must, of course, do much better at making credit accessible, but we cannot continue to misprice risk. Therefore, we must be mindful of the real danger that lies in the idea taking hold that banks must aim for quantity when it comes to lending. That's where we came in. Banks must lend more because that's the route to economic recovery, but they must do so subject still to detailed evaluation. Moving to personal banking, mortgage provision and arrears is one of our key areas of focus. On arrears, we are training our staff to deal with this appropriately, with the focus of keeping families in their homes through a variety of restructuring options and providing funds for property purchases wherever possible. Access and assistance are again what the AIB board is seeking to achieve for our customers. To make sure that our customer interactions improve, we have adopted what I call the 4 Eyes principle, where people are overseeing at the transactional level how the system is working and the decisions that are being made. Longer term and industry-wide solutions must also be found, and at AIB we are having good and constructive discussion with the central bank and government on this important issue. Deposit attraction and retention is another vital issue for the future. AIB is now very strongly capitalised, and must, working together with government and state authorities, retain and attract back depositors. The reality is the strength of AIB's capital position, which compares very favourably to our peers across Europe and means that our depositors can be absolutely assured of the safety of their money. There is also, however, the negative spiral of Irish banks having to pay ever more for deposits, only forcing up the market price and meaning borrowers have to pay more. This is in part because there are insufficient deposits in total in the domestic system to meet all the economy's lending requirements. This needs to be managed, and perhaps there is scope for consideration of possible state intervention in order to help achieve this by imposing maximum rates for a period, as well as doing everything necessary to regain international market access for funding. The challenge in all of this was well identified by Jim O'Leary when he spoke here last year. He drew attention to the danger that the stampede to make sure that the past cannot happen again results in such an aversion to risk that banking doesn't function. I believe we are moving to strike the right balance, but we need to go further than that. In the same way that I'm demanding that staff of AIB reach out and connect with people in communities, I believe the bank needs to establish a forum where it sits more closely with businesses and communities to look at the problems being encountered by them. During the boom times, Ireland established a special forum called the National Economic and Social Forum, where it could hear the views of those marginalised in society. I now believe banking needs to do the same for each sector of business and society. Politicians too should sit on this forum so that they can clearly hear the challenges we all face in meeting one another's needs. The relationship framework in this challenged Ireland needs to be more closely set. A challenge for the banks is that because they are so ostracised, the relationship with government, understandably, has become very distant. More distant, though, than is good for society. To build strong banks again that are well-resourced and able to support the economy, bank boards and governments need to understand and accept their respective roles well. This can't be done through the media, through proceedings in either the House of the Oireachtas or through the post. We have to achieve mutual respect and trust for and in each other's skills, perspectives and objectives. The distrust of bankers, however merited, will not ultimately resolve the problem of limited lending, which needs us all to work together for its revitalisation. We in the banks must constantly challenge our tendency to believe we know best when it comes to how to run our business. Ireland's economic recovery needs its financial system and its pillar banks to function. To that end, and for banking in Ireland to succeed into the future, and indeed to have a future over the next 5 years, that is the heart of your concerns here. There is going to have to be an open and trust-based relationship with no surprises to either side. A great help in this regard would be a simple, well-defined and structured principles-based code on the interactions between the state, the independent regulator and the banks, making clear the obligations on the banks, the objectives for them and the processes within which everyone will operate. Government might also go one step further and appoint, in line with the USA model, a pay-czar for the banks to avoid any of the pitfalls of the past. If Ireland was to do these things, it would not be out of step with what is happening with banking internationally, including in countries that are ahead of us in reforming their banks. In the UK, the Treasury expects remuneration arrangements to be set in accordance with a code. In the US, a pay-czar reviews compensation packages of the top 100 earners at 4 banks that are still benefiting from their TARP provisions. In Iceland, the remuneration policies are approved at annual general meetings, but within a government stipulation that there should be no incentive schemes in the banks unless it is agreed with the government. What all the international case studies show is that in time, and once trust is established, there are a number of principles that will get a banking system functioning again. These principles are that governments eventually manage their bank and financial holdings on an arm's length commercial basis, that governments move on to using their own agencies somewhat distant from government to manage government ownership objectives, stability and long-term societal issues within the banking system. That in time, governments take a transparent intervention through normal corporate governance channels to banking. That the issues that remain at government level are typically limited to restructuring and divestment, remuneration and recapitalisation. Many will say that it was too much trust by the political system and regulators that was at the heart of the banking crisis we have today. But some trust has to exist in the commitment and abilities of the new boards of the banks if the banking system is to do what the country needs it to do. If I and my board colleagues are to make the A in AIB stand for accountability, access and assistance, we need to be trusted to do what we need to do in order to make that happen as quickly and as effectively as possible. Of course, success also depends on wider factors. It must be acknowledged that a return to more normal banking conditions first requires concerns about sovereigns to abate. Therefore, there must be a concerted European-wide solution. Ireland can't act alone. Talk of leaving the euro, for example, is dangerously naive. And dare I say it, our tendency to become fixated on the negative sometimes does mean that genuine reasons for optimism are either disregarded or go unnoticed. Ireland is making good progress on its programme, very different to other peripheral countries as recognised by the Troika. The EU-IMF programme is, I believe, the right solution. I might argue that ideally it should be longer term and slightly less radical in pace and budgetary contraction. But overall, I believe it will facilitate a return to growth and confidence. And confidence is the most important thing of all if the future of banking in Ireland, and indeed the Irish economy in general, is to be secured. We can succeed in each and every one of the objectives I've spoken about today, but the key ingredient which will transform them from individual successes into a winning formula for the future is confidence. The banks need to have confidence in their own structures and skills. The government needs to have confidence that the banking system it has underpinned will deliver the results the country needs. Customers and taxpayers need to have confidence in both their banks and their government, and the international community needs to have confidence in Ireland's ability to recover. That sounds like a lot to ask and expect, but I believe we are getting there. Like many disasters, the initial stages of recovery are slow, but as problems are solved, the pace of recovery inevitably quickens and people begin to look forward to the future with increasing confidence. I think we are definitely heading in that direction. Thank you.